So many new traders struggle with buying at discounts and selling at premium. And the reason for that is because when price is coming into a discount zone, it doesn't come in like it's going to reverse. It comes in as if it wants to keep going to the downside. And when it's going to an extreme premium, it's not going there like it's going to reverse. It's going there like it wants to smash the highs. In this video, I'm going to share with you a trade entry I got into on AUD at an extreme discount. Even though price was dropping drastically, I still believe that we're going to go to the upside, and I looked for buys. So in this video, we're going to start by understanding the overall market direction on AUD scaling down from the 12-month time frame. On the 12-month time frame, you can basically see that the structure has been bearish, creating lower high and the lower low and the lower high and the lower low until we had this impulse move to the upside, breaking significant 12-month structure. After that break of structure, the next thing we would like to see would be a retest at an extreme level. And right here, using our Fibonacci from this low to this high, you can basically see very clearly this is our extreme discount zone, our extreme premium zone. And price came to the extreme discount zone, and look at how impulsively we saw that rejection after mitigating the extreme discount zone. And look what's resting right there as well. We have the inefficiency resting right there as well. Now we start to scale down from time frame to time frame, going from 3 months time frame. On the 3-month time frame, you can see we have this inefficiency, and we also have this last down close candle before an expansion that broke this 3-month significant high. So price came back down to mitigate this key level, resting at the extreme discount zone. So you can see how this is aligning from 12 months to the 3-month time frame, coming into this key level. So all we would like to see with this impulse leg would be a significant weekly, daily, monthly high. Once we see that, we're looking for buys. And right here, you can see price is creating lower high and the lower low and the lower high and the lower low. And then we saw this impulse move to the upside, and we broke a significant monthly high. So all my analysis is for price to continue to the upside. So all I'm looking for is opportunity for price to come to discount zone, and I'm going to look for a buy to continue higher. And if you're looking at these highs right here, you can see these are all low resistance liquidities. So I'm not really going to be surprised to see an expansion to blow these highs. And also we have this low resistance liquidity as well, low resistance liquidity as well. And right here, another low resistance liquidity. Now, this is not something that is going to play out by next week. This could take years. So I'm basically looking at what the market is going to be doing from now to the next 3, 4, 5 years. And I'm looking for opportunities to trade that consistently, making profit in the marketplace. So we scale down to the weekly time frame, and on the weekly time frame, we can basically see right here we also have low resistance liquidity, inefficiency resting right here as well. Now we go down to price coming to the downside for a retest after breaking this significant monthly structure. And if you look at the weekly, it's also aligns with the weekly high. After breaking that, we'll have an inefficiency resting right here. Price came to that inefficiency, and after that mitigation, we saw a rejection. Then we came down to the downside. So all I'm looking forward to see right here is a significant daily break of structure. And right here, you can see we have a high, a low, and a break of structure on the daily time frame, an impulsive break of structure, and then we saw a retest. Price left liquidity. This trade right here, I was waiting for months for this trade to come into my key level, and I didn't trade it. I didn't try to sell it into that position, not because I can't, but because I focus only on the trend. Now, trading with the trend comes with its own downside and upside. And one of the downside is that you're going to have a high level of patience. If you're not patient, you're not going to be able to make any money if you're trading with a trend, because it just means that you're just going to be waiting endlessly, and then if you're not a patient person, you're going to just jump into the market and try to trade against the trend, taking several losses, and at the end of the year you realize that your P&L is showing negative because you basically didn't follow your rules in trading. So that is why I follow just the overall market structure, overall market trend. And right here, I wanted to see price mitigate this position. The blue line right there, I'm going to also show you why that blue line right there is a very significant key level for me. And as you can see right there, that's an inefficiency. That's the close of this inefficiency. And we'll also have this liquidity resting above it. Like I said, I always want to see liquidity resting above my point of interest. If I don't see liquidity resting above my point of interest, I'm very skeptical to get into that trade. So in this case, I love the fact that there was liquidity resting right there. So all I wanted to see was price to come run that liquidity mitigates that inefficiency, and then I want to see a significant break of structure. And right here you can see we broke structure on the 4-hour time frame. We created a low, we created a high, a low, a high, a low, and then we broke structure right there. So all I'm interested in is the last down close candle right here before that expansion of broke structure. So we scale down to lower time frames, and right here you can see this was the last down close candles before an expansion to break that structure. So this right here is my key level. I want to see a retest at this key level, and once price retests this key level, I want to see a 5 minutes break of structure to the upside. So we'll go to the 5 minutes time frame now, and on the 5 minutes time frame you can basically see how nicely price mitigated that yellow box. The moment we mitigated it, we created a high, created a low, and then we broke structure. And this was the last down close candle before an expansion that broke that structure. And right there, I put a limit order right there. I'm also going to share with you my entries as well on my MT4. And right here was my entry. Price just came back down, mitigated me, tapped me in. My stop loss was resting right here. The moment it tapped me in, we just saw this expansion, and there was a high impact news on that day. And I'm very still bullish on AUD/USD. I still want to see it gravitate to the upside, really have an expansion to the upside. And my first target overall is this low resistance liquidity resting right here. And that's why we still have this inefficiency. I want to see price gravitate into this inefficiency. But what I'm going to do is I'm just going to be scaling out profit as it goes to the upside. And if it wants to smash through this highs, which I believe it will, or which I believe it should, if it smashes this high, I'm still going to take a little bit of profit and then hold the rest. If we smash above this, I'm still going to take a little bit of profit. So this, my overall target on this trade, it seems quite unrealistic, to be honest, because looking at this key level right here, this is a 1:71, but I'm a swing trader and I'm willing to hold this trade for months. So it's not something I'm just going to close in a week or even a month. I'm not closing this trade anytime soon, unless I just hit my target for probably like my target for 3 months or 6 months, something like that. I could just decide to close the trade. But now looking at another thing I also wanted to put into perspective is the fact that if we draw Fibonacci from this low to this high, you can see right here, this is our equilibrium, and then this is our extreme discount. And look, we're still at discount. So if we're bullish, I'm anticipating to see price come at least to the equilibrium point. And price coming into this equilibrium point from where we are right now is around 134 risk to reward ratio. It seems very unrealistic, to be honest, but it doesn't really matter. The most important thing to focus on in trading is what are you saying? If price is showing you that this is where I want to go to, then what you do as the trader is to look for an entry, get into have take profit, realistic take profit positions. When price comes there, scale out some profit. If it eventually reverses and wipes you out, you made money at the end of the day. Another thing I was looking at as well is the fact that, so this is the overall daily low and the overall daily high. And if we use our Fibonacci from this low to this high right here, you can see that right here, this line right here is our equilibrium. I'm going to make this a different color so we can be able to differentiate what I'm talking about. So right here, this red line right here is my equilibrium zone. So we've not even hit the equilibrium zone yet. And you can also see that this key level as well, this low resistance liquidity, is not even at the extreme premium level. So I wouldn't be surprised to see an expansion to draw price into this extreme premium level. And another one I was also looking at is if we go to the weekly time frame to now see the weekly range low and the weekly range high. And right here, you can see this is the overall weekly range low, weekly range high. And if we pull our Fibonacci from this low right here to this high right here, you can basically see that we are still in a discount zone. And this key level, this red line right here is our equilibrium. This is equilibrium. So we're not even at premium yet. So I wouldn't be surprised to see that expansion to blow through this low resistance liquidity highs and come into this position. And also look at what's resting above the equilibrium zone inefficiency. So I wouldn't be surprised to see this act as a magnet to draw price to the upside.